Good day, everyone. My name is Andrew Milligan, and on behalf of the Society of Professional Economists, I'm extremely pleased to welcome you again to the latest in the series of interviews which we're having with economists, not just based in the United Kingdom, but the United States, and in due course, I think other countries about the world. And of course, what we're talking about today is not just the effects of the coronavirus, but how that's exacerbating some of the business trends that were already occurring in the world economy, and what some of the decisions for businesses and other policymakers are going to be in the months and years to come. Today, I'm extremely proud to be able to introduce us all to Dr. Dambisa Moyo. Welcome.
Thank you very much. Delighted to be here.
So to read from Dr. Moyo's CV, which is extremely illustrious, which is why she's on the SPE videos, of course. She's a well-known advisor in several areas, macroeconomics, geopolitics, technology. She's a board member of the 3M Corporation and Chevron. She previously worked at the World Bank and Goldman Sachs before turning her attention to speaking and especially writing. She's written 4 best-selling books. One we'll talk about at the end of the interview today, The Edge of Chaos, Why Democracy is Failing to Deliver Economic Growth and How to Fix It, which of course is the important point, published a couple of years ago. And she holds doctorates from Oxford and Harvard University, where she's a master's, etc. So a distinguished academic career, but also into business. And that's what we're going to be talking about today, is some of the business aspects of what's going on in the world and how that interacts with the economics as well. So Dr. Moyo, let's just start with a very easy question, of course. Let's step back before the coronavirus appeared. I know that you were worried about a number of the aspects of what was happening in the world economy, the environment and debt levels and inequality and that sort of thing. Would you like to set the scene as to some of your concerns about what was happening in the world economy before the coronavirus even appeared?
Yes, well, thank you so much again for hosting me. I'm delighted to be here. I think your question is particularly poignant because there's a temptation now to all think that, for all of us to think that things have gone to hell in a handbasket just because of the coronavirus. What is really important to understand is that things were already pretty ropey and in pretty tough conditions before the virus emerged. Just to give you some flavor of this, economic growth was slowing across the globe. One of the numbers that I use as a rule of thumb is the rule of 72. In order for a country to double per capita incomes in one generation, so really meaningfully alter the path of economic success, a country needs to be growing at around 3% per year. The last 2019 Q4, Germany had 0% growth. Many European countries were at 1 to 2% economic growth. The emerging markets, large emerging markets countries have been struggling also post the financial crisis, really exhibiting around 1 to 2% economic growth as well. So the picture was already pretty murky. And to add to this, we had real concerns around the impotence of public policy, both in terms of fiscal interventions, but also in terms of monetary public policy. We have negative interest rates in Europe and places like Japan. And public policy, certainly on the fiscal side, had shown itself to be in a precarious place. Specifically, the Congressional Budget Office in the United States had already raised concerns back in around 2013 about how the U.S. was going to struggle to support its Social Security and Medicare and Medicaid programs if it continued on the tilt of debt and deficits that the U.S. was on. So we were already in a bad place. What, in that respect, COVID has done is to accelerate or to catalyze the trauma that the world was experiencing. I've written extensively about how there were also some additional headwinds. Some of them you've mentioned, geopolitical backdrop, sort of U.S. versus China, and ideological shifts there, but also technology and the risk of a jobless underclass, concerns about the demographics, both the size of the world's population, the quantity of the world's population, as well as the quality of the workforce. Very, very challenging aspects. Income inequality has been on the public policy agenda for many years, a real issue in terms of social mobility declining and really showing this wide fissure between the rich and the poor. The issues of climate change, natural resource scarcity, absolutely on the agenda before COVID. And of course, debt and productivity declines have also been a real issue. But just to summarize and really to pick one thing, all of these headwinds, if we can call them that, are problematic because they actually create a drag on growth. And ultimately, we do need economic growth, contrary to the beliefs of many people. We need that to sustain improvements in living standards and human progress. But we also need it as a way to ensure that we can protect democracy, because you do need a middle class that is versatile, that is strong and able to hold and stand up against different regimes. And finally, we know historically that economic growth has been a catalyst and a driver of innovation. So for me, if I had to pick one, it's really about economic growth. And these other factors are really creating or hampering, creating hurdles and hampering the ability to deliver growth.
But if we pick some of those points up, especially, for example, US-China, I think would be a prime example. If we look back to the 2008 crisis, of course, there was a lot of cooperation in the world economy, the G20 and round summits and that sort of thing. This time round, we're not seeing very much cooperation between the big powers. You've mentioned US and China, but even within Europe, there's big debate. And we're certainly not seeing the joined up thinking across central banks. It's individual actions. So are you concerned about the lack of cooperation, even if individual countries might be moving the right way?
Absolutely. And if you look back in history, really out of the Gilded Age in the 1870s and through to what I would say were three crises that really characterized the first 30 years of the last century. You had World War I, the Bolsheviks, and then ultimately World War I in 1914. You had Spanish flu. By some estimates, as many as 100 million people were killed, 100 million people dead because of that pandemic. And then you have the crash of 1929, the economic crash. So you have the war, you have disease, and you have an economic crash. And essentially, if you look through from 1900s to really to 2000, one of the key facets or remedies to what subsequently happened, eras of low economic growth, political trauma. We had World War II subsequently, and we know the history on all this. What really was clear in this 100-year period was that there was much more global cooperation, whether it was the League of Nations transforming into the United Nations, whether it was Bretton Woods and the Marshall Plan, or the emergence of the ECC, which obviously became subsequently the European Union, World Trade Organization. I mean, there's a whole list of institutions that come out of crises in the 20th century and really underscore the point that there was a fundamental belief that in order to tackle a whole bunch of economic and political and indeed healthcare challenges, it was better to go for it as through cooperation and indeed globalization itself. But subsequently, I would say in the first 20 years of this decade, of this century, we've seen really a turn away from that sort of a view.
So you would be one of the people who would argue that the globalization pendulum is swinging the other way now, that we're beginning to see deglobalization in various forms.
Absolutely. And, let's go back into the 1990s when John Williamson really crafted the template for the Washington Consensus, which was really a big thought piece that drove the ideological beliefs of the World Bank and the IMF and multilateralism. There were really four aspects to this. One was that you were going to have more trade in goods and services. Number two, capital flows would be able to cross borders quite easily. So foreign direct investment, for example. A third point was the movement of people, immigration. Was really a bedrock of globalization and one which corporations have benefited from quite considerably over the last decades. And then the fourth was really about the movement of ideas across borders. All of these aspects, these four key pillars of globalization have come under threat. We've seen not just the US versus China in terms of trade hostilities, but also the fact that Brexit has occurred, shows a fracture of these more global or more integrated trading regimes. Capital flows, I've just been looking at some data, have fallen considerably over the last several decades. It's sure they ebb and flow in the interim, but really foreign direct investment has given way to a much more of a home bias. Immigration, populism has led to very anti-immigrant sentiment, which is leading more and more to public policies around both refugees and displaced people, but also much more aggressive policies for even educated talent, which was really quite new to be seen. And then finally, this idea of the splinter net, that the fact that today there's a real risk that we'll have two internet platforms, one led by China, one led by the United States and Europe, really underpins this idea that even ideas and ability for supply chains to be global is also under threat. So yes, globalization to my mind is really under challenge. I will just say one other thing, if I may, which is to say perhaps it shouldn't be surprising for people like myself who love the idea of globalization and market capitalism and liberalism in terms of politics. We shouldn't be too surprised, because the truth is, if you take a massive step back and you look at the chart of history, really the period that we've just experienced of globalization, market capitalism, liberal democracy has only existed for about 1% of human time. And so in that respect, it's been an aberration from what is a broader trend towards more state action and intervention, and perhaps, unfortunately, less liberalism in the political sphere.
Well, we could talk a lot about events in Brazil and Russia and Hong Kong and China and etc. But we must move away from 64,000 feet, I think, down to business. The Society of Professional Economists was the Business Economist Society before. So let's get down to some business matters. Now, in one of your articles, you said, and I'm quoting, global supply chains have been materially disruptive by aggressive policy responses to COVID-19 in the form of closed borders and travel bans, on top, of course, of the pressures that you were talking about just a moment ago. So how do you see businesses altering their supply chains and reacting? Let's take it down a level to the business level and the sorts of companies that you're advising.
Yes, so certainly the issue of the veracity of supply chains has come full force onto the boardroom and corporate agenda. I think it's fair to say that over the past 30 years, maybe even longer, the sort of attraction or seduction of globalization has been around cost effectiveness. And so really the reasons companies went abroad and they thought about a more diverse and diffused cost structure, or rather supply chain, was really because of the costs. And they thought this would be a much cheaper way. This would absolutely affect the bottom line, in that you would be able to ultimately not just affect your cost structure, but by being in these countries, you would affect top line revenue. That discussion has been materially disrupted, because now the focus is much more about the resilience of those supply chains. We've seen with the COVID challenges that it's not just about sort of desirable goods and services. We're talking about necessities. The ability to get respirators, to get masks across borders. How do we do that in a way that ensures that different people around the world can continue to access the supply chain? And what's become clear is that we've actually had the need for governments to step in quite aggressive ways through their Defense Protection Acts. China and the US have both essentially pulled that trigger, forcing corporations to prioritize local homegrown customers and supplies in specific nations, as opposed to honoring and respecting some of the sort of broader global supply chain. So as we look ahead, I think what's really important is for corporations to ensure that their systems are flexible enough, not just in terms of supply chains, but as I mentioned earlier, thinking about where they're going to tap talent in a world that's become so materially more hostile against immigration and populations moving across borders.
Yes, I think it's interesting day by day, isn't it? More governments are beginning to buy stakes in companies, create national champions. Right. The pendulum is clearly swinging between, old-fashioned free market economics, so to speak, if it ever existed, and let's say a form of state capitalism. Not easy for boards to know how to cope sometimes in those circumstances, especially if you're working for a multinational organization. Which government's rules are you going to abide by?
Yeah, absolutely right. I think I will say at a very macro level, there is a tendency to think, oh my gosh, the world is falling down and all the trauma is happening in our boardrooms today. And I very often go back to minutes or read about what other boardrooms have survived, in past eras. Obviously, boardrooms that were in the middle of World War II would have had these issues. I mentioned in my opening remarks Spanish flu, that the confluence of the Spanish flu, World War I, and the stock market crash and Great Depression. If you're in a board at that time, I mean, those would have been material issues. I do think that we are experiencing an additional aspect that makes this period unique, which is that we are also facing a sort of cultural and social backlash. And that makes it much more challenging for boardrooms and corporations. The whole era of, companies are simply around to generate returns for financial shareholders, come what may, that era is gone, and there's massive expectations from regulators and from public policy, but as well as communities and individuals, employees as well, that corporations are doing more and going beyond just the strictures of financial returns. And so in that respect, I do think that the world's becoming much more challenging for boards. And the answers, believe it or not, are not always obvious. I think a lot of people who sit outside the boardroom often say, well, why didn't that board do this? We are very often constrained by certain levers and certain priorities. And even with the best intentions, these things can sometimes, particularly where there are lots of vested interests in public policy, can become quite challenging.
Yeah, a much more diverse people required on a board and much softer talents than perhaps was the case 10, 15 years ago. Let's move away from business for a moment and think about the recession that the world economy is undoubtedly in. We're seeing a lot of fiscal and monetary support being pushed along. Looking 2 or 3 years out, what sort of policies would you encourage governments to be thinking about? I mean, the obvious one is the Green New Deal, but perhaps we might just have to spend much more money on resilient health systems and such like. Are there any particular policy levers that you think governments should be pulling at this moment in time to try to make sure that this is a sustainable recovery rather than just another short-term bounce out of this very deep recession?
Yeah, so I think it's clear that governments have a lot on their plates. I mean, I think it's a bit of a truism to put it like that. I do worry a little bit that because we're all very dedicated to solving the urgent, which we absolutely should be doing. So all the A teams are focused on the urgent. In this case, the pandemic. I think there's a risk that we perhaps don't really focus on the sort of deeper structural challenges, which I would say are extremely important and will define the world that is coming along. And so in that respect, what do I really mean? I mean that, there's a great knowledge. You just mentioned a couple of things. You mentioned the Green New Deal as an example. I don't think anybody in principle, regardless of where you are on the spectrum, believes that we shouldn't be exploring new innovative ways and alternatives to try and tackle or address the crisis, the climate change crisis. But I do worry a lot that type of a narrative tends to forget that there are still 1.2 billion people who have no access to reliable energy in a cost-effective way. And so I think there's a level of sophistication and understanding of these different trade-offs that government will continue to have to address in years to come. So you've just talked about the urgency of healthcare. The reaction to shut down the global economy was really one that I believe was built on understanding the healthcare risks, but perhaps not fully understanding the economic consequences and second order effects of the decisions that were made. And I'm not saying that we may have come out with a different solution. We may have, but The point just being that I don't think there's enough understanding by in the discussions and the discourse in this new cultural and social uproar, that there are trade-offs that have to be made that can be particularly aggressive and can create new problems. And so, as an example, a very superficial example, when we shut down trade links, what does that do for people who live in poor countries? Or even if we demand more aggressive climate change initiatives, which are really important, what does that mean for people in poor countries who we've already seen are starting to move across borders in a very disorderly way? How do we address immigration in those types of situations? So we have to move away from normative types of approaches to solving these problems and be much more thoughtful about trade-offs.
Well, I'm delighted you've been saying that during the course of this SPE series. The word externalities in one form or another, or trade-offs perhaps, if you want to use it, has come up time and again with the various speakers. So the point you've made is amplifying one another. Let's again perhaps return to a business point of view and the single word innovation. Again, taking one of the quotes out of your articles, board members must not lose sight of their longer-term strategic oversight responsibilities. Yes, absolutely clear. Crises can offer rare opportunities for innovation, not only to defend the core business, but also explore investments in adjacent areas. So I think a couple of questions there. Innovation, short-term, long-term, how do you do it when you try to keep your business afloat and such like, and different timescales, of course. You've mentioned it before, how to deal with today's problem, but I've got to innovate for the future as well. So any thoughts on innovation generally, any areas of innovation that you're particularly excited and interested in, or is it just an ongoing process for a board to try to make their firm innovative?
Well, so I think there are a couple of things, and perhaps you'd be a bit surprised to hear me say this, but what is patently clear is that you do need a government who understands the importance of innovation. My concern, I think a concern of many others, is that government has become very adept at addressing challenges in the here and now. So, we've got a crisis, we'll turn on the spigots for stimulus. But there's less and less the discussion of these large-scale plans, the Marshall Plan or the Manhattan Project or the development of Silicon Valley or build out of infrastructure, these large programs that really defined the 20th century and were absolutely a bedrock for economic success. And so in that respect, we need to make sure that government is more data-driven, much more forward-leaning, much more focused on measured outcomes, and of course, should not be corrupt. And I think that really we shouldn't lose sight of the role of government in delivering this basic infrastructure, basic public goods, which I'm afraid to say has been quite challenged, whether it's education, clearly healthcare, but roads and railways, infrastructure in the United States. The American Civil Engineers Society has graded American infrastructure as a D+. So government has to be involved. In terms of business, every now and then a shock occurs that can be, and in this case, clearly the pandemic has been a shock, but it has revealed for many businesses that they are able to now work arguably with a more diffused population, so people who are now working at home, which has enormous knock-on effects for whether or not businesses can innovate in terms of using technological platforms as we're using today, but also what does that mean for the real estate that companies are leasing or owning? There are lots of knock-on effects that will demand innovation. But when I say innovation, I'm not just talking about product innovation. I'm talking about innovation in operations, how you run a business, but also innovation in your strategy. What is it that you're going to be as a company when you grow up? There will be a lot of businesses and many boardrooms, I'm sure, where they're having real conversations about whether or not the business model, indeed a particular business, actually is viable over the long term. I mean, we can think of airlines, I'm sure many restaurants, cruise liners are the ones that are obviously in the newspapers all the time. But I think that we need to think about these risks as being short-term and long-term. Businesses, they love risk as long as they can manage it. If they can mitigate for that risk, they are in the business of risk and reward. But these shocks definitely force companies to think about what their strategy is, what the business model is, their operations, and what their plans are longer term. And I think all of those are particularly at the tip of the spear this time round, because we are living in a world of technology that has afforded us many things that I think many of us thought were at least a decade off, but have been clearly shown to be in the here and now.
Oh, absolutely. We've all been talking with friends, whether working in the health service or other firms, who said, I would not have believed it possible. But, look what has happened in a short period of time. But I think going back to one of your points, of course, the benefits of this technology are not actually diffused across each country equally and not diffused across the world economy.
Yes.
So just as the point you were making about access to energy not being widespread across the world, access to this technology is not yet widespread across the world.
And this is of great concern as we continue to see universities announcing that they're going on 100% online. I was born and raised in Zambia in Southern Africa. I was just in Southern Africa over the last year's Christmas period. They continue to struggle with the lack of reliable energy. How, if you are a Zambian student who's enrolled at Harvard or even at Cambridge, which I believe is also going largely online this year, how are you supposed to compete? How are you supposed to actually participate in web seminars? And again, I think these are the sorts of trade-offs that are greatly worrying when people just think about climate change. They don't actually consider that these types of shocks could materially affect the life trajectory of many people, many people around the world for decades to come.
Well, we're coming towards the end of the interview, but I wanted to end with a question about your last book, which, as I said before, is called The Edge of Chaos, or that's the short title at least. And in it, you argued that 4 particular headwinds, demographics, inequality, commodity scarcity, and technological innovation, are driving social and economic unrest, and a fundamental retooling of democratic capitalism is required. Now, this, of course, was written in 2018, and we're now in 2020. If you were going to rewrite the second edition of the book, so to speak, what would you be including, emphasizing, de-emphasizing, or do you still feel that those are the key topics? And if so, when you're talking about this fundamental retooling of capitalism, what sort of aspects of it at a high level or at a lower level are most important to you?
So I think that the way I wrote that book was really focusing on structural problems. So things that were eating away at economic growth, the more corrosive long-term factors. I mean, I think obviously anybody you ask now would say, oh, I would definitely add in pandemics. But there are aspects of pandemics that have a long tail, so to speak. The fact that we've seen SARS and MERS and Zika and Ebola, maybe those were trial balloons for what has subsequently become the COVID 2020 COVID pandemic. But really, I wouldn't change any of that portfolio. Perhaps what I would emphasize much more is the fact that we have clearly we underplayed just how fast deglobalization is occurring, and not just in terms of how we operate on the upside, i.e., how do we trade with each other, or in good times. But what's been clearly, patently clear and revealed is that the sort of diminution of cooperation is also on the downside, meaning when the world is affected by something that crosses borders, we're still unable, or not still, but perhaps more clearly unable to come together to fight a common enemy. And so that's, I think, an area that I didn't fully explore because I had still made the assumption that, in bad times, the world would come together. And that I was, absolutely wrong, unfortunately.
Well, we are all living life as economists, political analysts. We often work for businesses, and we're citizens as well. It's a complicated world around us that we're trying to cope with at present. Thank you very much indeed, Dr. Moyo, for your time. I hope everyone agrees this has been a fascinating tour of the last 120 years of economic and financial history, down to some of the difficult decisions that the board's got to take as it thinks about some of the trade-offs that face it as an organisation trying to survive in difficult times. So thank you very much indeed, everyone, to dialing in. As you all are, I'm sure, well aware, this is just one in a series of interviews which we're carrying out with senior economists around the world. One or two will be appearing every week, every month. So please do look at the Society of Professional Economists website for the future editions of these interviews. But I just want to end by once again thanking Dr. Moyo for most interesting time and wish her all the best with the fifth book when it appears in a few years' time. Thank you very much, Dr. Moyo.
Thanks very much. Thank you.
Good day to you.